Welcome back to another daily recap. Today is Thursday, July 25, 2024. I'm Sam Morton, and the time is currently about 8:22 a.m. There is a GDP data release at 8:30. I'm going to keep an eye on that and see what happens. I'm also going to explain what's going on here. A few things look different than usual, like this upsloping trend line. There's also one here in a lighter blue color. I've got this magenta dotted line. So the blue lines are levels and zones like I always have. Well, I've had this trend line or both of these trend lines on for a long time. They got below this one and it's valid. It's the reason it's still on here is because if they come back up into this at some point, say before the end of the month, then it's important. Today, there happens to be a formula derived level at around 549, 49 or 550 essentially. But this lower trend line, so they are currently bouncing off of this thing in the pre-market. It's 540.16. That's the price in the pre-market. And it's going to probably move around a little bit at 8:30 with this data release. And they've been bouncing around this. So it's a valid level to trade against, but it just is going to change throughout the day because it's going up. So they can get below this. They can get, way below this. Anything can happen. It's we're kind of on a precipice in a lot of ways. Next week is the end of the month. So not very many days left in the month. And if they closed, I'm talking about a monthly close here, up around 545.65 or so, then we've got something going on, which I'll explain later. So I'd like to see them do this. So they would have to go up. So are they going up from here? If they get below this, they could go lower. Just not saying anything's going to happen. This is just my mindset going into the day that I think that what I'd like to say, I should say this, what I'd like to see is them to go up and close around here somewhere by the close of the month. So they've got a few more days to do that. And a lot can happen between then and now. And that's why we have other levels to trade, small trade, scalp trades of 4 points to 4 to 6 points or so in the E-minis. But anyway, all that being said, whatever happens today, these are the levels that we will use as a baseline to make trades in the E-minis. And we'll come back to this same chart, analyze whatever happened, and talk about it then. See you then. I just want to start off with something a little unusual. While I was making the video this morning and working on the email, I actually entered a trade, just bought one contract when they were bouncing around this level. The next time they came down into it. So I started recording this after I was in the money for a little bit. So you can see that I was long. This is just real time here. And just, didn't know what they would do. They would go much higher than this, but I was happy to get a handful of points. And I ended up closing it out right around $500, which is 10 points with one contract. And just want to show that to you. So I just moved it down or just close it out at some point around. I mean, this is pre-market action. So there's not a whole lot going on at this point. You can see the times, 5:44 in the morning. Or sorry, 8:44 in the morning. There we go. Right there. So let's back up. So I closed it. That was it. So $500 to start the day. Not too bad. It is about 6:30 now. Interesting day. Let's unpack it a little. First, we need to get a bigger view for a couple of reasons. So I have some more room to show you a few things. So this level, it's an upsloping trend line, which I said this morning in the video and also in the email that I sent out to who I'm calling my pre-subscribers. I hope you don't mind if I'm saying that. I said in that email and this morning that I was looking for them to go higher, and they could come below and spike below this, but this is the area I'm looking for them to close this into the month. But honestly, they got there sooner today and they could still go higher and move around, but whatever. The levels each day are good for the day. And this level, I keep calling it a level, this trend line, which is upsloping, that goes back a long way, proved to be a pretty good support. And they did bounce, or they did spike below. So, okay, you're trading per the rules. You're going to go long at this point. Let me just put some levels on here, and then we'll talk through it. So when the spiders came down into this trend line, it was right before 10 o'clock, 9:59, and we're calling it 539.60. That was pretty much exactly the penny, within a penny or so of where they were, or where that level was when they came into it, and they spiked up 4 points pretty easily. So that's the base hit. Doesn't look like much, but that's the base hit of 4 points. I actually had one sitting at 6, a trigger to pull 6. I figured if they can get some support down here, they're going to go a lot farther. And I was willing for them to bounce lower or them to spike lower. And I will show you the recording of this trade. So I ended up actually taking 10 points off and then trailing a lot. I made quite a lot just for one trade. So I'm just illustrating, just showing this to you to illustrate that that's the base hit, although it doesn't look like a lot because they would have not messed around with this level because it's just a trend line that's important for a lot of other reasons. And I shared it this morning, and it was good for trade. Never got down here to this. This was a zone down here, never got there. And when they got up to 544.75, well, treat this like normal. So 544.70, and that was a near miss. They came up too close, pulled away. I'm not going to take that trade again, at least like on this side. If they come up again, I'm not going to touch it here, for example. So that's the wise decision to make. I'm going to make this dash because it's still okay if they get above it, which they did here, for a recycle. Well, let me show you what a recycle trade would look like if they come back down into this level, which, by the way, so 544.75 was the calculated level, the formula-derived level. Well, we're going to put 544.80. I'm going to add 5 cents on the other side. Just not necessary to do all the time. I just have the habit of doing this just to catch more trades because it just works more often than not. But what would happen with 544.80 as your operating level to trigger a long trade for a bounce back up if they're going to continue higher? Well, this is what it would look like. You would want to buy and get a bounce up 40 cents, within a few minutes, and not come down and close candles below this red level. So the green line is your profit target level, and the red line is the fumble threshold level. Well, what do? They came up to within 1 penny of triggering this or pulling a profit, pulling a base hit. So when they do that, in 1 penny, they pull back very quickly. Within a minute, they're below this level. You're back at the break even, or even slightly out of the money. You jump out because that was your trade. They didn't do it. Something else is going on. They're going to probably consolidate and go lower, and that's exactly what they did. So I'm just pointing this out because playing by the rules, these levels, that's what you would have done. I'm going to call this one good. And for that matter, we'll call this level, I'm just going to make this a dotted level. So in this 545.65 was just a reference point. It wasn't a tradable area, something I was just looking at. I figured if I could keep this on for the rest of this week and next week until the month of July ends, just want to see what they would do with it. I'm going to keep it on there because they could still go back up there and close in that area or somewhere below in this general area and still be the signal I'm looking for in the monthly chart for a possible trend change, but we can talk about that later. So that was playing by the rules. One base hit and nothing else because near miss and just a wash. And if you enter this trade, you would have jumped out after you realized they weren't going to give it to you. And this is the kind of thing you have to be kind of, vigilant about what to look for. It's basically probably 80% of this strategy is how to manage the trades once you're in them. You can blindly enter a trade in E-minis every time the SPY hits a level, but what do you do after the fact? That's kind of the trick. But anyway, here's the trade I did. Started recording this. It was a few minutes before 10 o'clock, 9:57, and you can see what I'm doing here. In a second, I'm going to put limit orders to buy, or limit order to buy 2 contracts in the general vicinity. Here we go. At this trend line. So, and at first I had 6 points I'm looking for just to take 1 contract off. So that was the base hit. They would have given 4 points right there, and they got below, and I put a fumble threshold, the equivalent over here, because just this would be I'm looking for certain closes below this level for a certain amount of time. And yes, I would make another decision, jump out or do something, but also have support down here. Yes, it's kind of a lot of points to get down here, but you just have to understand your risk tolerance and your margin availability. So I just held on to this, and I'm just going to show it to you, and I'll just kind of scrub ahead as they got lower, found some support eventually. This was a big spike below, kind of thought they would. But even playing by the rules, once they got back up above this fumble threshold, the time had not elapsed. It was still good, and so there was no real danger, honestly, even though I was out of the money for a while. So you'll see me in a minute move this up. I realized, okay, they found some support down here. They're heading up here. That's the thought process. That's the same thought process I had in the morning. And so I moved there we go. I moved it up to 10 points, and I think I put a 12-point trailer. So when I got the 10 points on 1 contract, $500. I trailed this other one up, and so I have a target up here, just a pretty healthy distance from this next level. Not really sure I would even take this next level necessarily, because if they're going to be up here at this point, some point of the day, that would be pretty strong. So I'll show you what I did. I trailed it up, pulled me up, 12-point trailer, kept going. They got to a point, and I think I can show. I'm essentially looking at an area about right here. I'm examining some other charts. I thought, well, I already have, other, whatever that was, $1,500 or something like that, $1,450 or whatever on this. I just jumped out. The reason you saw it disappear because I thought they're going to hit some support here, and I have a fair amount on that second part of the position. So I'm just going to take it, and I just put a line here to see, was I right about that? Was that the top and they're going to fall back down? But as it turned out, they kept going higher. That's what I wanted to show you. But I'll take what I got. I'm not complaining. And they did go all the way up, but look what they did. We already talked about this already. That was the near miss. I didn't adjust that ahead of time. I was not planning on taking this trade. I was just watching it. I'd already made $2,400 or something at this point with one little trade, so I was happy. And well, you saw the rest. No more trades for me, and that would not have counted if you were playing other rules because of the near miss. We already discussed that. So here are your trades again, with a little bit of a visual. A green circle is the one base hit right there. If you held on to it and were willing to, and you understood that this was a good area for support, like I did, you could have got a lot more. That's not a trade. Even with the 5-cent buffer adjusted, it was too close, and they pulled back. But this is a recycled trade. It would be adjusted a little bit if you wanted to. If you left it at 544.75, you would have got 4 points, by the way. So sometimes that happens, but if you're just sticking to a set of rules and treating every single level the same way, that's what you would have done. And so they bounced here. I don't normally take a trade at the same level, but I just want to point out how interesting it is that when it came down into this trend level later in the day, many hours later, they bounced again for a pretty healthy little spike there. But it was after 3:30. I don't take trades after 3:30, and then that's the rest of the day. So really one good trade. I'm happy with what I got. Here are the tracking logs, this SPY tracker. This sheet is the play in by the rules sheet. So you can see one base hit here at the level in column D. The next one not triggered when they got up to 544.75 because of the near miss, and then a wash because of near miss on that recycle. So if you tried to take it second time around, you would have got a pretty big warning signal to jump out, and hopefully just got out with a wash. So basically one little base hit, but nothing wrong with that. And I ended up getting 24.5 points with 2 contracts. So I'm happy. But that is it for today. Interesting times we're in. I'm glad that volatility is back. I'm going to refrain from looking at longer term things, maybe by the end of the month. Let's take a look at the weekly and the monthly chart, talk about a couple things. But for now, it's just levels each day that tend to work. So thanks for tuning in. If you found this video helpful, hit that like button, subscribe to the channel, and you'll get more daily recap videos like this. If you are wondering how to get these levels, currently I'm providing them to anyone who wants them. Just go to the website, Ticks&Trades.com, that I've set up, and I believe it's the Learn page, and there's a form. Just provide your contact information. I'll add you to the list. So I'll be back at it tomorrow with new levels before the opening bell. Thanks, and have a great rest of your day.